All right, now moving forward to the MT4 platform. Now exactly what's going to happen, we're going to analyze on the MT4 platform the market rates and the instruments rates, which is our second section. Now on the first section we spoke about the leverage and the margin level. Leverage is when we exactly, just a review to what I said, leverage is basically on an account of $100, what we do is that we multiply that amount by up until 200 times so that when you open a position, it'll take an effect to the market. So basically this is leverage. With simply $100, it won't take any effect on the leverage that the company offers you. You can open positions with a much higher spirit, much more confidence. You can take effect to the market so that your account cannot be liquidated and your chances of making profit will be higher. Now, about the margin level exactly is when if your margin level is below 1, it means that your risks of losing money are very high. Now, your main goal is for your margin level to be always higher than 1. Alright? Okay, moving forward. Now on the webinar, we will be seeing this. The market rates. Now, what are the market rates? Market rates, basically they tell you every instrument possible. Now, to get more information about the instrument, you can simply point out on the small e, as you can see here. Alright, and you will have the full information of the specific instrument. You have stocks, you have currencies, you have commodities, you also have CFDs. Now, what are exactly CFDs? CFDs are future contracts. Future contracts, basically stocks with expiration dates. Now, for more information about it, please, I would prefer that you contact your financial advisor or contact me on my email, adam.wahlberg@b4x.com. Now, on the left side, you will see a bunch of stars. Now, you can select the stars. Now, the stars mean that you want this specific instrument, alright, to your favorites. So that, for example, if I'm putting CAD-GPY, Canadian dollar against the Japanese yen, what I can do is on top you will see filter. You will need to click on filter and you click on favorites and you'll have all the favorite instruments that you preferred. Now, CFDs is as well, future contracts and stocks. And you have Forex, which are commodities, currencies, mostly currencies, I would say currencies. Now, it includes also commodities. So this is basically it for the market rates. Next to it, you will see instruments trend. Now, instruments trend, exactly, it calculates the popularity of the specific instrument. For example, gold right now is the most popular. 49% we buy and 51% we sell, depending on the gold market. So we need to check it out. But the popularity of the gold market is very, very high. And this is kind of the grid. Now on the chart, it's the same thing. Alright, you don't need to concentrate on the chart. Chart also gives you the popularity of every instrument available so that you can keep track on what's going on, what is the best thing to do, what is best to trade on, and so on. So this is our first section here. Now, on our second section here, this is where we start opening positions. Here you will have order. Now, on order, you will have instrument. Now, the instrument, you can choose which instrument you prefer. So let's try, for example, the Euro USD. I selected the Euro USD. The amount is in lots. Now, what exactly are lots? Whenever you have 0.01 lot, it means $1,000. $1,000 is compared to the $100 that you made, that you deposited. It takes effect with the leverage. It's not $1,000 that you're investing, it's only $100, but the $1,000 is with the leverage that is offered to you. Now here you will have your stop loss and your take profit. So let's talk about stop loss and take profit. What exactly is stop loss? Stop loss is when you put a maximum of loss that you're ready to lose, and when the market reaches at this stop loss, it closes your position automatically so that you do not lose any more money. I will be giving an example. If, let's say, I'm opening a position at $100 only, and I'm putting a maximum of amount. All right, so let's say I'm putting $20. So when the market reaches a minimum of $20 on my account, when it reaches to a minus $20, the position will be closed so that you don't lose any more money. You can put on a rate for $10, you can put on a rate for $1, depends with the amount of money and with the range of the stop loss that you're putting in. Alright, the take profit basically is the same thing. Now we'll be explaining why are we putting stop loss and take profit. Take profit is basically when you see that the market is going with you, that is going stronger, that it's being stronger and gives you the advantage of profiting, you're putting a take profit, because I will be giving right now a rule in the market, which is also a strategy. Every time that you see that the market is going up and you're making profit, always put a take profit. Why? Very simple. We have what we call a rebound. A rebound is when we see that the market is going very much strong, but it's always, there's a big chance that it will go down later on. So you're putting a take profit so that when you're making profit, you're putting a rate. When it reaches that rate that you made enough profit, it will close the account, because there is a possibility that the certain market, the Euro USD, can fall down. So as long as I close my position, I took my profit, I see that the market is going down, but my position was closed. So I'm good to go. I did my profit, I traded professionally, I'm ready. Now, how to put your stop loss? Stop loss always needs to be at a lower rate that you see here. All right. So let's say I see 1.2578. Let's put 25669. No, let's change it. All right. Now, let's put the take profit, and the take profit has to be always at a higher rate than it is right now. So let's put 89. 2589. Check it again. Let's put 91 just to make sure. All right. Okay, so right now, if I'm losing $2.50, my position will be closed, and if I'm making $1.50, my position is closed as well. Now, if, let's say, I want to have $2,000, $3,000, all right, of course, this is going to be much higher. Now, it's either buy or sell. Now, what is exactly buy and what is exactly sell? Here we have the Euro USD. What exactly does it mean, Euro USD? It means that what we're trading Euro against the US dollar. If we're buying Euro against the US dollar. If we're selling Euro against the US dollar. Alright, so if we're buying at this certain rate at 1.2579 Euro against the US dollar. And if we're selling again Euro against the US dollar. Now, our main goal is whenever we see that the market of the Euro US dollar, the Euro is going up, we buy. And whenever we see the Euro US dollar is going down, we sell. This is a rule that we need to take. Alright, for now, we're just opening a simple position. We don't know if it's going up or if it's going down. This is just to check how to open and to see the position that we're taking. Now, I will be comparing to the chart and I will be explaining the chart. Let's check on the chart. All right. Now I see that it's going up for a day, so let's put 1 hour. I will be explaining the chart very soon. I see that for now it's going up. It's getting very strong. All right. So yeah. So I will be buying. All right. It is possible that it could go down. I don't know. But for now, I want to open my position. So I'm clicking on buy. All right. So we have an invalid take profit. Now it means that the amount that I'm putting has to be much higher. All right. Okay, here we go. I put on a take profit of 1.2598 compared to $3,000 that I have opened the position with. All right. Now, if I reach a profit of $7.19, my position will be closed. And if I reach a loss of $5.41, my position will be closed as well. So here we go. I click on OK, and I see my position on the bottom. All right, so this is for the order. Now we have pending order. Pending order, basically what it does is, let's say that we're opening we want to open a position, but not today, but tomorrow morning, because we see that this specific stock, this specific commodity, this specific event is going to happen, and it's going to take effect to the market at this certain time. I would like to place a pending order that it will expire and it will open immediately at this specific time. Now, normally pending orders are based through stocks. They are best for stocks and also commodities. All right, but it would also be preferred if we check on the events. The events, I will be explaining the events very soon. So let's move forward. On the instrument, I choose, let's say, Canadian GPY, whatever. I put on the amount, which is in lots, the stop loss, and the take profit, the type, which is buy limit. We have 4 different limits. We have 2 limits and 2 stops. What is buy limit and what is sell limit? Buy limit is when there's a rate that you need to buy. All right? And you're buying at a higher price. When you sell limit, it's when you sell at a higher price. When you buy stop, is that you're buying from the market at a lower price. And when you sell, is when you sell to the market at a lower price as well. Now, at price, you choose the price that you want to buy or sell, limit or stop. And then you put the expiry. Expiry, you put on the date and time, as you can see here. All right, we have June, May, we have the time here, 13/13, and then we click on OK, and then we place the order. Next to it, we will have the cubes. Now, the cubes allow me to open position instantly. Here you will have enable one-click trading. All right, we're doing that simply because if, let's say, instead of opening a position and waiting for a confirmation and then click on OK, the position will be opened automatically. Now, here we have the sell rate and the buy rate of the Euro USD. Now, if we buy or sell, here we have the pips. We can close the cube. We can add here. Now, normally I didn't enable one-click trading, but normally if you want to open a position, let's say sell, instrument, action, amount, open rate, click on OK, and another position has been opened right here. Now, if let's say you want to enable one-click trading, you won't need to pass through all that trouble. Just click here, waiting for order, and the position is opening automatically. All right. Now that we're done here, let's go over the charts. At the moment here, I would prefer that we click on the small button here so that we can have a better view of the chart. So let's click on it. and we can enlarge it to have a better view of it. Now, here you can change the instrument that you prefer. You can put on a rate of 1 hour, 4 hours, weekly, monthly, 1 minute, 5 minutes, 15 minutes, etc. Here you will have the sticks. You can choose your graph. If you want lines, if you want bars. I normally use the sticks. I prefer the sticks. You can put on a 3D, which is best. I always put a 3D. Alright, and you have a much better view of the market. Right now, we saw that in one day, the market went up. You can keep track here on just putting the small pen by clicking on it. We saw from this day to this day, the market went down, so we needed to sell. Alright, so this is basically it. You can keep track of what's going on. So we had a rebound. We're having right now a rebound. I'm thinking that it might go up again a bit, and it'll lead me to a small profit. Alright, and then it's going to be a bit stable. Alright, now, we have next to it real-time chart. The real-time chart calculates, again, instantly, tick by tick, of what's going on in the market of the Canadian GPY. Let's put the Euro USD since we started off with it. Alright, we see that it's very, very, very tight. Alright, it could be under pressure. We don't know exactly what's going to happen. Alright, we're just following. But for now, I see that the Euro is getting a bit stronger, so I can start opening my positions. Now, let's put on the next section. Here we see the positions that we opened. Now, on the position that we open, we have the ID of the position, the instrument, the action, which is either buy or sell, the amount, the open rate, and open time. My stop loss and take profit are here. I never put a stop loss and take profit on the two other positions. The swap. What is swap? Swap is basically when you open a position either overnight or during the weekend. Here we have the commission, the close rate. Now, on the swap, there's a small percentage that you might be charged on the swap. Now, action. You can add it. You can edit your stop loss and take profit. You can add in more money to the position, etc. And you can close it. Once I close it, click on close. And my position has been closed successfully. Alright, now, here we also have our closed positions. These are all the positions that I opened for the past 7 days. I can put for the up until 30 days, etc. And here we also have the pending orders. Closed position, show you all the positions that you closed. You can keep track on them. Alright, now, let's go over bforex.com again. Now, I would like to concentrate on the event calendar, the economic calendar. Right here, on Forex Tools, then select Economic Calendar. The economic calendar, basically, what it does is that it tells you the event that's going to happen today, and the instrument, alright, the currency that it will take effect, and the time that it will be affected on. Now, let's take, for example, okay, here at 8:30 a.m. First of all, you can change your time zones. Alright, my time zone is Eastern Time, US and Canada. Alright, at 8:30 a.m. there will be an event going on. Once we click on it, initial jobless claims measures the number of individuals who filled for unemployment insurance for the first time during the past week. This is the earliest U.S. economic data, but the market impact varies from week to week. Alright, this is great. This can take a lot of effect to the US dollar. Now remember, whenever you see here on the website, we see 3 bars, it means that it's very important. It means that it takes a lot of effect on the US dollar. A higher than expected reading should be taken as a negative bearish for the USD, while a lower than expected reading should be taken as a positive bullish for the USD. Here you can check on the chart. We see that it's kind of volatile, but when we also open positions on these events, it will lead us to a lot of profit. On the details, you can see the release URL, so you can check it out. The history. All right, we saw that it moved, that it went down a bit, that it was very stable. All right, so we're kind of expecting some improvements maybe. All right, so this is basically it. So you can invest on the US dollar. You can keep track on every event. If the dollar is going to go down compared to the Euro USD, the dollar is going to go up compared to the Euro USD as well. All right, this is the time to trade. Now, I see that we're having a question. Can we ever lose more than $100 in the account? Of course, if we don't put a stop loss and take profit, for sure. Our main goal is to put these options. All right, if you're not putting a stop loss or take profit, as long as you're in front of the computer and you're keeping a track of your position, there's nothing to worry about. Now, this is basically it for the webinars. For more information, please contact your financial advisor or send me an email at adam.wallberg@b4x.com, bforex.com. Thank you very much for coming to the webinar. Have a wonderful day. Bye-bye.